How everybody doing? It's your man Zuri Exchange. In this video, we're gonna be going over some trade breakdowns that I was able to catch last night going into today, and the 10 things you need to do to be able to implement that almost every day. Because there's no guarantees in the market. No guarantees you're gonna make 1K a day. No guarantees you're gonna make 500 a day. No guarantees you're gonna make $1 a day. But everything depends on your psychology, your discipline, and your strategy. No strategy is 100%. No matter if you follow the rules A through Z, you can do everything right and still lose on the trade. So I'm saying that to say that trading is not for the weak. Looking at the charts can get boring. Waiting for your setup can get boring. But if you stay down, stay dedicated, just wait for your setup and execute, you literally have nothing to worry about. So today I'll be going over the 10 things, 10 steps, 10 tips, whatever you want to call it, to be able to get close to that, get close to doing that every day, if not every day. And I'm gonna just let it all out. It's my imbalance strategy. No, this is not in the course, but if you would like for me to add it to the course, or if you have any questions, feel free to hit the comment section, share the video, in my DM. Any way you can get my attention with a question, just hit me and I got you, and I respond in a timely manner. But first thing, other than trading during your right session, which is technically number one, so these two kind of go hand in hand. So this video, there'll be 11 tips instead of 10. One little bonus. First thing you wanna do, you wanna make sure you're trading in the right trend. Now, not the right trend, the right trading session. Now, that all depends on the pair you're trading. So with me, I trade metals and indices. So I trade NAS 100 or US 100, or I trade gold or XAU USD. And the best time to trade those pairs, NAS 100, you shouldn't be trading NAS 100 in any session, in any other session other than the New York session, and that's from 8 a.m. to 5 p.m. EST, Eastern Standard Time. 2, you want to be able to identify the trend. I will not be going over each step. I'm just giving you the list, and then we're gonna go over to the charts, and I'm gonna implement. I'm gonna show you the visual side of it. 2, you want to wait for structure to be broken, or you want to wait for a base candle to be broken in the opposite direction of the current trend, which can either be considered as a bullish engulfing being traded through in an uptrend, or a bearish engulfing being traded through in a downtrend. And then what you want to look for is imbalances that are actually created after the bullish candle has been traded through. And again, I will not be going through, you feel me, in detail on how to do that, but everything will be in the trade breakdown. Next, after you get your imbalance, which would normally mean price would trade away from that area that it just traded through or broke, you would wait for a retracement back into that area. Now, after you get your retracement and it taps the area, all you're waiting for is candle confirmations, which can mean either A, the type of the zone, B, an engulfing candle, or C, a rejection candle in the way of the trend. Let me see. All right, so once you, what's that? Double 6, the entries. All right, 7. Now your target, your TP. Your TP is either going to be 20 pips off rip, or you're going to target previous market structure. Now in the uptrend, you would target a most recent high. In a downtrend or a bearish trend, you would target a most recent low. 8. We're gonna go over stop loss, which is how much you're willing to risk per trade. Now me, I'm not risking more than 20 pips. I use 20 pips or I use 14 pips, but it depends on the type of trade setup that I'm taking. It'll never always be 14 pips. It'll never always be 20 pips. I go based off of the setup that's occurring at that time. Now your entry, number 9, your entry time frame. All the work, all the trading, all the markups is going to be done on the 5-minute time frame. I don't use the 1 hour. I don't use the 30. The most I'll do is switch over to the 15-minute just to see what it's doing on a higher time frame. That's not the 5-minute. And then once I enter the trade, I'll watch it from there. And last but not least, 10 or 11, depending on how you were counting. You only want to take, you want to have a certain number in your head. You don't want to overtrade. Because technically, you can take 1 million, let's be a little bit more realistic. You can take 1,000 trades a day. But realistically, that's not in any way, shape, or form what you would want to do. That's not how you build discipline. That's not how you maintain your discipline. So give yourself a number. How many trades you want to take a day? You win those trades, you're done for the day. You win one, lose one, you're done for the day. You lose both of them, you're done for the day. Just show up tomorrow, do the same exact thing. The same exact thing. Because like I said, no matter what, no trading strategy is 100%. None. Now, I was able to backtest over 500 times. I have over 100 trades worth of data. The strategies that's in my course and the strategy I'm about to be demonstrating shortly all have an 81% win rate. Every last one of them. Now, mind you, again, the one I'm about to go over, the strategy I'm about to go over, my imbalanced strategy, everything's done on 5-minute. It's the only time frame you'll need for entries, markups, exits, everything. But it's not in the course. So again, if you like what you see and it makes sense to you, or even if it don't make sense to you, you can ask me whatever in the comment section or my DM on Instagram at Tradesbyz, or my Facebook at True Loyalty. All right. Here are the previous 2 trades that I took. I believe this was Friday or Monday, one of them. But this is what the chart should look like once you're in them. or whatever. I'm zoomed in right now. Let me zoom out so you can see a little bit of the market structure. All right. So as you can see, starting in this area, this whole side, we had a rally up, created higher highs, higher lows, higher high, higher lows, and the higher high. This was the last higher high before the transition bearish. Now, how I know that is because of this candle formation that happened right here. I call it the continuation killer. It's a part of the imbalance strategy. Again, I'm not going over that, but if you want that in the course, just let me know, and I'll work on adding it. So we have price closing through this bullish candle, this big blue candle right here. It closed below it right here, which transitioned us into bearish or downtrend structure. I believe this was this was like Thursday night going into Friday, because this purple line right here is the session break or whatever. So this is around 11, I want to say 11 p.m. at night. So we had this huge retracement after transition bearish, and we had price come back up to retest this previous lower high or this previous support turn resistance. So now that we got the continuation killer up here, we have a downtrend. It retested a higher high, and as you can see right here, it gave us another continuation killer, which is basically an engulfing or a momentum candle that gets closed or ran or traded through. Basically, it happened literally the exact same way in this area right here. So what I'm looking for is a breakout. Basically, I'm waiting for build up, which is what we had right here. Price and I want to close below these lows to continue the downtrend. This would be considered support. So what I'm looking for is a support break. So as long as price doesn't close above this high right here, this red wick, as long as price does not close above that high, then my bias will remain bearish or down. I'll be looking to sell, basically. So we end up getting a break. We end up getting a break around, maybe it was like 2, 3 in the morning. I was asleep at this time. I entered this trade. I had a pending order set in this area. So if it broke below this, I knew it would. I had full confidence that it was going to continue to go down, to continue the trend and the continuation, which is what literally happened. I had a break. I got in as the candle was moving in this area, and I targeted previous structure. I've targeted these lows, this low right here and this wick low right in here. Now, when I woke up, because I work in the AM, I get up around 4. So when I woke up, I saw that it had created structure again. It had recreated support again. So I'm like, okay, we're still in the downtrend. If this gets broken, then I'm gonna get in for another sell. Now, I did not market execute, but I did set another pending order. And I didn't even see this one happen. But I set a pending order, price broke, and I targeted. For this one, I targeted this low right here, almost the full leg of structure. And the rest was history. I believe both of these trades were a little above 500. I'll show the trade at the end of the video, but yeah, that's what you're looking for. So you're looking for, you feel me, you want to trade during your trading session, identify the trend, wait for a bullish base candle to be traded through in an uptrend, wait for a bearish candle to be traded through in a downtrend, mark your imbalances, wait for price to trade back into it. You have the 3 trade entries, which would be a engulfing candle, the tap of the zone or the tap of your imbalance, or any type of rejecting candle that's in your favor. Target either structure or 1 to 2 risk to reward, and let the trade hit. 2 trades a day and be out the market. You don't need more than that, because this trade right here went for 121 pips, and I only risked 16. This one right here, I only risked 28 pips to make 93. So again, 2 trades is all you need. Wait for your setup, be patient, trade only during your trading session. If you get your setup, execute. If you don't get a setup, you don't trade for the day. Come back tomorrow.